What's up, bros? Time for a trade recap. I know it's been kind of a long time. I haven't uploaded in like 2 weeks. I do have a strategy video coming out very soon as well that I need to work on. I'm here. I'm not dead, in case any of you were wondering that. I don't know why you think that. I don't know why you think, your one beloved person who gives you the trade insights and all that shit would fucking die. That would be awful. That would be terrible. Why are you thinking that way? Okay? Don't think of me that way, bro. Don't think that I'm dead. I'm still alive. Obviously, today is trade recap day because we took 2 trades today. I'm experimenting with this new model, and like I said, this new model, if you're in the Discord, you already know that, I've started trading a very new model, and I like this model a lot more than the old model I used, which was inverse fair value gaps. And if you're very new to the channel, if you just showed up, then I'm trading a new strategy, and there will be a new video coming out explaining exactly why I shifted to this strategy and what this strategy actually is. Which let me quickly summarize. We're trading high risk to reward, bottom tick, top tick trades based off of high time frame PD arrays like rejection blocks and engineered liquidity and all these concepts that seem almost ancient to ICT traders, although if you're deep enough in the ICT rabbit hole, and even me, I'm not that deep into it, then these are actually concepts that many ICT traders use anyway, right? It's a lot less popular than the basic, fair value gap, break of structure, liquidity sweep bullshit, right? Right, and also we're trading something called key open levels, and as you can see here, it kind of worked, although the market, pulled a Judas today on us, and we got betrayed and we got edged on this 930 level here. And regardless of that, we got stopped out on both of our trades today. I had a very strong bias for longs today, right? Let's start with our little top-down analysis here. You can already see I've got some levels marked out here. I'll go through these in a second. I just want to give you like a really good in-depth top-down analysis as to why I tried longy today, okay? So, first of all, we can clearly see, I know, we've come down really hard here, but previous day high, we've got up here as well. And, that previous day, we failed to close below the wick of the day before that. So for me, because we manipulated the low of that day, we manipulated Tuesday's low, and then we reacted out of that, we got a bullish day here. To me, that's like, okay, cool, we're bullish. We created a bullish candle. We manipulated the low of, Tuesday. So my expectations are we're going to come up based on, just candle movement and previous day high, previous day low type strategy. I'm very new to it as well. But basically, because we didn't close below this wick on this day, right? And, we started creating bullish movement here. Today's ideal expectation is that we close above the wick of here, because we failed on this day to continue this bullish downtrend, right? And as well as that, we filled in this entire new week opening gap here, and we're kind of, how do I say this? I mean, I don't like looking at the weekly time frame, but we filled this gap here. We're inside of we're technically inside of a weekly gap. Although I don't really use the higher time frame confluences in mind. I just use previous day high, previous day low. Look, ideally I wanted to come up, not solely because of previous day high not being taken, but because we had these 2 levels here. 3 levels actually, right? We had to the tick, right? Which means at the exact same level, 2 key opens aligned with each other. And basically what that means is, we like trading above and below these areas. We never go one direction away from these areas. It's really rare to do that. Like if you look at daily and 4-hour candles, there's always a wick above and below, normally 80 to 90% of the time, right? And that's why you can see here we traded above this level and then dumped after that. Ideally, what I wanted to see was, we come back up here and trade above these levels based on what I saw moving into market open. We had true day open, right? We had the start of the new day align exactly with the 1800 open as well, right? Which is when Asia session starts. And we had both of those key levels aligned with each other. I know we kind of traded above here, and I will take that into consideration for next time, that we already traded above this level. So, us dumping far down here only makes sense because we already had some trading above here. by like quite like fairly actually, 75 points. It makes sense, but then again, we had these two levels that were aligned with each other, and we had 930 here. Usually what happens during AM session in New York is, there's a good chance that we can come back to midnight open. And because those levels are aligned with each other, to me, that's a very high confluence level. Now, obviously, that failed today. We had 930 here as well. We edged it, like I discussed earlier. Nasdaq clearly wants us to touch it inappropriately because of its movement recently. But then again, we can only work with price action, right? We can't work based off our own judgment and everything else that we think of where the market's going to go. We can't actually expect it, okay? We have to look at what price is giving us or what price already did. And then based off of that, try and take a trade off of where we think it will go next. Instead of jumping in and saying, I think it's going to go here, I'm going to place a trade here, right? Because that's what trading's all about, is using everything in the past to see where the future will go, right? It's the only example where you actually look back at the past, because looking back at the past is a pretty bad thing to do in life. Don't fucking do that. Anyways, right? These two trades over here, I took them based off of this 15-minute gap here, right? The consequent encroachment, or the 50% mark of this gap. We like reacting off the 50% mark of imbalances. And as you can see here, we also had these two lows as well. Are they out? Yeah, basically one of these is an hourly low as well. But we had these two lows, which is right above the CE, again, the consequent encroachment of this 15-minute gap. This is what you'd consider engineered liquidity right here, okay? Because that means we're building up stop losses in this area. And you can see actually in my first trade, we did have a reaction off of these areas, okay? This is a really good play. It's just it didn't work out this time. And obviously moving into like 930, like volatility is a bit weirder, it's a bit stranger. And I left room for a 15-point stop loss instead of a 10-point stop loss because of that sole reason. Well, we still got stopped out. And I probably would have gotten stopped out on this trade as well at like break even or slightly in profit if we did manage to get into here without, price coming down a little further. You can see price did react off of these levels. It's just, we didn't expect, it didn't play out this time, okay? I can't really say anything above that. It's just our strategy didn't play out here because we wanted to fill this 15-minute gap a little bit more before reacting out of it, which is completely fine, right? It's one of those moments, like the 1 out of 5 moments that, we lose the trade. But next time, we do something like this, pair it with other confluences, it will probably work out, right? We trade based off of probability. So this first trade was based off of that. And then we had, and also we had all of these like fucking, look, we had equal lows here on the NASDAQ. All of these like 4 relative equal lows here on the 1 minute, on the 5 minute, I think it's different. Look how, like, bro, it's really obvious, right? We did run past these areas, which clearly says that price wanted lows. But that only gave me the confluence of, we have these areas to react off of. And then we've also got an SMT with ES. Or we had an SMT initially with ES, I believe. At the time, we didn't take these lows, right? What's this? 925, 930, 935. And then at 935, we were already trading down here, right? So we had an SMT off of these lows here as well while I was taking that trade, okay? I'm not going to try and narrow it down. It's going to take too long to look. Actually, you know what? We'll fucking look anyway. Just to be precise, just so you know I'm not bullshitting you. Where are we? Okay, so these lows were taken at around 935, right? So on ES, where were we at 935? We were up here, right? We were trading all the way up here. 935. And these lows were down here, right? These lows weren't taken until 942. At 935, we were up here. Where were we at 935 on the NASDAQ? Up here, right? And where were these lows on the NASDAQ at the time we were at the price? Like, look, bro, come on now. You see? I don't have to make myself any clearer than that. We had an SMT, all right? And I know it took me a whole 60 seconds to show you what the SMT was. It's just part of the game. I like going in depth with these trade recaps. It makes a lot more sense. It's a lot more transparent. I just fucking farted. Anyways, that was the first trade. Didn't play out. Second trade over here. Kind of a little bit rushed, but, we had another confluence here. We had this 4-hour fair value gap, and we had the consequent encroachment again off of a fair value gap. And this is a 4-hour gap instead of a 15-minute gap. A lot higher chance to react, and price completely ignored it. I had a 10-point stop loss at a 1-to-4 risk to reward ratio here. Clearly the market just wanted to dump further, okay? And that just shows bearish bias for the day. The only thing I will say is that we had an SMT off of these highs over here, and I took the second trade during this SMT. So that's completely my fault. That's probably why we lost that second trade. I will look into that next time. I will make sure we don't trade in the opposite direction of the bias if we do have an SMT. I should have learned that by now. I've traded that with the inversion model so many times. SMTs will always ruin you if you're trying to enter a trade. You have to, if you're not looking at SMTs, and if you're new to trading and you just discovered what SMTs are, I'm not going to explain it in this video, but basically, if you don't take those into consideration, you will severely decrease your win rate. As in, if you trade against an SMT, let's say you're trying to long and you have a bearish SMT, good luck. Good luck is what I have to say, because these indexes are very correlated with each other. So second trade as well didn't play out. Clearly we wanted lows, and that's completely fine, right? I mean, I do kind of see it now. We do have a bunch of liquidity all throughout this area here. Let's do a little rundown here. Yeah, I mean, I don't really have anything else to explain other than the fact that we just had our bias wrong today. I will say, however, we did have a play off of the daily wick, okay? This daily rejection block, right? And this is a rejection block, wick, whatever you want to call it, right? It is a rejection block in this case because we had this, we just had this whole price range here that wasn't filled, and we filled it with this wick, and then we reacted off of that. So we have that daily wick. If we scale down to the lower time frames, if I get rid of these other trades here, there's so much shit on my screen. Forgive me for all this stuff on my screen. Where is it? Daily wick, right? We have the consequent encroachment again, right, of that wick. Guys, look what happened, right? Look at what happened. And I literally saw someone take this trade, right? We had the consequent encroachment of the daily time frame, the daily wick. Look at the reaction we got out of it by the tick, right? Entry here with your model, and then we've got a 10-point stop loss. Look, right? It doesn't get any easier than that, and then target at 1-to-4. That's the strategy, right? That is literally the strategy, and this would have played out if I took this, right? But obviously I wanted to get in based off of what I saw. I saw engineered liquidity. It was all of that against just a daily wick. Although this just goes to show that, the daily time frame has a lot more power in terms of reacting against the consequent encroachment, because, it's the daily time frame, and there's much more of a chance that we get some sort of scalping retrace entry off of that than the lower time frames, because we start top down. If there's a daily wick, try the daily wick. If not, 4 hour. If not 4 hour, 1 hour. That's the kind of strategy that I'm following. And yeah, that worked, although I wanted to see us trade above here because we were closer to these levels, right? So fair enough, we're down $460 for the day. The beauty in this is that I am psychologically okay, because I know for a fact that my next trade or two trades will recover the losses throughout the last week or two. That's the beauty in the high risk to reward trades. It is so healthy on your psychology. And, normally if this was a trade that I took on the other model, I'd be like, man, I have to take another trade or two or wait a couple days to get the money back. And it's so bad risk to rewards is, if you don't have good psychology with it, then it's basically the death of you. And I learned that the hard way. This new model that I'm learning it so fast, and I'm understanding these concepts a lot better. All it takes is a couple more days and weeks of backtesting, and maybe we'll start seeing better progress, right? That's what it's all about. I'm completely fine taking both of these losses today, right? Because I know that, moving into the future, if I just follow risk management, I'll be completely fine. That is the beauty behind your plan, okay? You have to find something that works with you, and in this case, this high risk to reward strategy works with me. And I literally love it, right? So, if you want to get to know what I'm working with now, and if you want to ask me what the hell I'm doing, or if you want me to put you on this new strategy that I'm learning, Discord link in the description. And as well as that, right, you've got all the trade recaps there individually as well. You've got a massive trading family, okay? We are piling up really fast. We're almost at like 150 members, and I'm yet to become profitable. My aim was, and my aim still is, to build one of the biggest trading families out there, okay? One that's genuinely authentic, okay? Because all you see out there is buy my course and you'll become profitable, okay? I don't have anything to fucking pass on to you, right? At this point in time, and I don't really plan on doing that. I plan on building more of a community than I do planning like to sell you anything, right? If that makes any sense. So that's my aim. I wanna build a massive trading family, and by the grace of God in this world, I have faith in it, right? And I really want you to be a part of that growth, because there will be some crazy growth in December, and especially moving into 2026. I can't stress this enough, okay? So if you want to become a part of that growth and become, a part of a group of people who fucking care about you, because that's what it's about, trading around a group of people, trading around an environment that you're familiar with, giving positive energy and all this shit, don't miss out on that, okay? Because it might as well be the one thing that changes your life. But yeah, those are the trades that we took today. I didn't actually check news. I think we didn't have news today. That's what I heard. But clearly we were really bearish for the day, which is fine, honestly. I guess at that point it's just a measure of, understanding bias, understanding the market. I'll look over that, another time. I've got so much shit that I need to do for the rest of the day. And, this that ends it off for the day. I don't have anything else to record today. And yeah, if you want to have a little chit chat, Discord link in the description, right? Fucking see you boys tomorrow, whenever, next time, the next time we trade, I guess. So much stuff is going on in life, and all we can do is move forward, right? Stay disciplined and, trade responsibly. See you boys next time. Peace the fuck out.